All right, everyone. We got a big group in here, huh? How many? We got 30 people in here for today's session. Looking forward to this one. Giles, what's going up over there? Everyone. Ruben, good morning. Question: first month subscription will expire 24th. How can I switch to the year subscription? Ruben, if you log into the account on your profile, there's a menu on the left. One of them is to manage your subscription. Over there, it'll also give you the opportunity to upgrade to the yearly with a big note saying, once you do that, send me an email and I'll refund your last payment. If you have trouble or need that direct link, just send me an email. I'll help you with that. All right, so first thing I want to say is that my intention was during this training session to start getting into the entry that has no name. And I'm not going to do that. I'm not going to do that because, as you all know, I was traveling on Tuesday, arrived late that day. I had only yesterday to get back into it. I didn't get enough chance to prepare as I would like to. So we're going to make this session a free flow session where we're talking about whatever you want to talk about, open questions, anything that anyone wants more clarification on, anything anyone wants to discuss. Proposed name is the J Rocket. That's what, Greg, I was looking. So here's the thing, though, I do want to talk about before we not talk about it. So this is what the entry that has no name, AKA the J Rocket, looks like, right? And it looks like this is resistance right over there. And you get a price bar that's coming right up into that resistance. And then the next price bar is a down price bar, right? Down price bar. And then the entry is when price makes a higher high right at the resistance level, taking it out, right? This is what we always have referred to as the entry that has no name. And I would like to really get into it a lot more. Now, it is different than this, where normally we wait for the break of resistance, then we wait for the pullback and resumption up. So this we have very clearly, we have break, retest, resumption. And that is conquering the markets all day long. And we have that great terminology, break, retest, resumption. We need to find out how to best suit and term this, because instead of the break of resistance, here you have the test of the resistance, or vice versa, the test of support. You get a price bar that then is rejected right at the level and then immediately breaking. And it doesn't mean it's a foolproof trade. The same thing as this trade over here, where it might not be the first entry and price might actually consolidate, and it might be the second or third entry that the price takes off of. You still have the same stop loss, that if you're wrong in the trade, you're wrong in the trade, which is why I take the first entry and I don't wait to see if we have the second, third. It's all the same to me. Either I'm right or I'm not. And it's the same thing here. It might not be, they work out best, by the way. The J Rocket works out best when it is the next bar that triggers and sends it off. But you could get a fake trade that consolidates, before ultimately going or hitting your stop loss. So anyway, we will get into that in a more thorough session at a later time, only because I want to be able to present it with tons of examples and talk about that. It's called the 3-bar play. I don't know. I never heard of that. Someone else wrote, I don't know if they wrote it on a YouTube comment or if they wrote it in the Telegram group, but they said that there is another educator, they said his name, who calls it the hopping the creek or jumping the creek. So I'm sure it's a setup that look, I'm just basing it off of what we do here and my own, I don't know if other people, hopefully other people have, just like support and resistance. Obviously, that's the furthest thing from being unique to myself, as well as trading off of trend lines and chart patterns, right? No, there's no way I claim that. And same thing with this, but it's something I observed. I'm not sure what other people call it or anything like that. Test, redirect, break. I do like that, Jeff, because you don't get the break, retest, resumption. It's a test, reject, break, right? All right. So, Augustine, what's the difference between the entry with no name and a breakout, which we don't take? So there is a big difference in that the entry with no name never breaks out. It comes up into the resistance. It's not like normally what we're taking is this. Just follow this as resistance. Augustine, normally we get this is a break, right? And then we look for a retest and then a resumption, right? So we're not getting the break here, which is a breakout. We never got the break. This is just a test. You never break the level. That's the one difference. And oh, by the way, that also sets up like, and again, I would like to be able to present it better, but so that often comes up, why does the break, retest, resumption work? Like, and again, all I could say is I only know what is, not why. I don't know the whole behind the scenes dynamics of what's going on, with why this works. I know that it works, right? So it's the same thing here. I don't know why. I could guess what's happening here when you get the move into the level and then a rejection and then the resumption above it, right? And it's very similar to what happens here with the break retest, because the retest is when the level's tested, right? The move into the level is kind of like, it's not a retest, but it's the test. That's what actually, that's actually the terminology that was used just before. Who said that? Yeah, Jeffrey, the test. So instead of getting the retest, you're just getting the first test. The rejection is the move away and then in. Look, I just know what works. And I do notice, by the way, for the entry that has no name, when you get the clean move, because it's not always going to be clean, but when you get the clean move, it's a big move. It's a big move. And I actually noticed it, not for myself. I noticed that a lot of people in the Conquering the Markets group were taking this trade. I noticed it going over all of the weekly recaps. I noticed it for over the past several months, because that's not a trade I would take. I would take the retest and the resumption. But I noticed a lot of people taking that trade. All right, so as we get into this question over here, I think it's the first one. And if you have any questions, please go ahead and include them, and we'll just get to them in order. Before I read the question, which I will, right? I just want to really stress this, especially if you're new here. So I do not believe that it's smart. I do not believe it's prudent to be trading the indexes until you are already consistently profitable. All right. I believe it's much better for you to be learning on the FX pairs. I believe that you'll have a much easier time, and I believe that you'll have much more success. And I believe as then you learn what it takes to consistently profit in the markets, at that point, since it is the same thing, trading the indexes, that you could then move over to the indexes or anything else for that matter, right? But there is a sequence to how this goes. And the first sequence over here is learning simply turning the corner to profitability. And, as you begin the course and as you start with the basics, right? Connecting your account to MyFX book, writing up your weekly recaps, holding yourself accountable, taking no more than 3 trades a week, right? No less than 3 trades if you have a problem taking trades. Now, when you get to this level over here, this is 3 months in a row of at least a 1% return, then you know whether or not you should be taking 3 trades a week or 1 or 2, depending on if the market's consolidating, right? Or if it's expanding, or right now, if you're avoiding, US dollar pairs, you know that you can still take 3 trades a week, but focused on cross pairs, right? It's not until you get to here that I think that you should focus on the indexes, because then you'll have a much higher skill level and you'll be able to do it. I think that if you're starting off trading the indexes, you're making a mistake, and it's going to probably take a month will pass, and then maybe you'll be like, all right, well, maybe I should listen. But I do think you should listen from the beginning. So the question though is on the SPX or the NASDAQ tradable like a stock, or is it more of a market indicator? No, it's 100% tradable like a stock. Actually, it's preferable, in my opinion, than trading a stock. And the thing that traders use, or I think is the best to use, is the E-mini futures, right? You could trade this whether it's on TradeStation, whether it's on Interactive Brokers, or through like TD Ameritrade, right? You could trade the E-mini futures. It's tradable 100% like a stock. And not only that, it much better. So Danny has 2 questions. Like I said, I'll take them in order. Maybe the resistance was a bit higher in the first place. Are you talking about one? Well, for the J Rocket, for the entry that has no name? No, no. It's definitely a clear setup that occurs quite often, where you get the move into resistance, then a pullback, and then a break of resistance. Junti, what's going on? There you go. That's what I was just talking about. That's the smart thing to do. And Junti, you're all over it. That's exactly what I was just talking about. This is Danny's first one of 2 questions. And again, if you have any questions, go ahead and include them below. On the live streams and in the chat, I read and see possible trades that involve a short when the trade is coming into resistance. When I look at the true trend is up. So Danny, first thing of all, and we talked about earlier in today's live stream, I'll include the link. Well, if I include the link, I'll lose my chat. So if you go to the playlists on the channel, and you look up the Forex playlist, the first video is on the true trend, and that is the one that is a little bit more extensive. It's a 28-minute tutorial, and then there's also this one over here, right? Great tutorial on what the true trend is and how to use it. Now, disclaimer, I rarely use the true trend. I'm looking at price alone, and I'm very clear in those videos that, look, price supersedes the true trend, right? You don't need, like, if I'm trading off price alone, I don't care where the true trend is. I'm trading off support and resistance. So if you're having trouble getting a read on the markets, then use the true trend. Use that as a crutch. Use it as a tool, and it will help you. But look over here is the same thing I talked about in the last live training session. Like, for example, here on Bitcoin, like, as the true trend is down, that's when I'm looking to accumulate, because I know that the greater trend is up because of the cycle on Bitcoin. So when you get the true trend down, that's actually when I'm looking to accumulate longer term here on Bitcoin. And I put up and I showed why you could use briefly, the true trend BTC with the regular true trend, and then use that in a bull market to know when you're looking for accumulation. So is that the same? I mean, there's 2 people have 2 different lines of thoughts here in the stock market. There are people who always think we're crashing, right? And the stock market is crashing rarely. And then there are people who think that, like, long term, stocks will continue to go up. Could we beat Japan, where we peaked out, like they peaked out in the 90s, and we never, for a while, for decades, make a higher high? That's possible. But, every time the true trend is trading down, if you believe that, the long-term trend of the markets is up, that's an accumulation phase. So that's all different than when we're swing trading on FX. If you're having trouble distinguishing the trend, then pull up the true trend and lean into the true trend. But here's a perfect example. Here, the true trend, that from what Danny's talking about, here I see the true trend is up, right? I also know that the entry CI has been overbought for a long time. As we came into resistance, right? As you came into resistance, you see that trend line resistance over there. You have resistance right overhead. That's a place you want to look for short. It doesn't matter that the true trend is up. Do not rely on the true trend. Other way around. Rely on price. If you need help, then again, just go back to last week's training session where we talked about just using, the first pullback of the entry CCI. By the way, this was done off price alone, and you could see also it happens to be the first pullback. Like, I'm not looking at the true trend. I'm doing that off price alone. The second question. So I see the entry, but the course says to not take a trade against the trend. This confuses me. So I hope that all clarified everything on that. Let's see your second question. Number 2, it's clearly discussed how we take a trade after support resistance was broken. I seem to struggle with the possible trade moving into resistance support and resuming off. So not breaking it. How do you approach a trade? You take the trade on the first bar after touching the support or resistance, or let the trade play out first for extra confirmation. Danny, this is so. I think there's different ways to approach this. I'm going to tell you the way that I approach this, right? So, for example, Heath has astutely pointed out that, if you get a move into resistance, I wish I could pull up something. I had an example. So I guess I just have to, I'll go off this chart over here. Like over here, this is a perfect example. Heath has pointed out that his observation is that when you pull back into support, here's the pullback into a support level, right? I take the first trade always, and I'll explain why in a second. Heath has noticed that if you wait for not the second, right, but he says like the third or the fourth resumption up, that's usually the best trade in his opinion to take. Now, why? Well, he's observed that if you go that far, that's usually when the move will happen. Okay? Now, I can't argue with that at all because that's probably the case. It's a high probability trade. However, at the same time, I always take the first. Why do I take the first? Because one of two things could happen. The first thing that could happen is you get a clean move off the support, and I don't miss it, right? That's number one. The other thing that could happen is what happened here. We had all this sideways price action before it took off, but I have the same stop loss regardless, right? Whether I entered here or I entered here, I have the same stop loss. And even though this trade didn't take off right away and it took off later, I was still in the trade. But if this trade would have took off right away, I was also in the trade. So that's why I take it. The first one is because I never know. And if I'm wrong on the trade, I'm wrong on the trade. And it's this, if the trade winds up working out, not right away, but later, it's the same exact thing. So again, that's how I see it. That's how I do it. That's what I would recommend. But there's not one. There's more than one. It's nuanced. There's no like, it's not black and white. Jeffrey, is it possible that the break, retest, resumption is the same as a test, reject, break? I don't think so. I don't think so. So, and when we do get into the session that's specifically for that, and we're going through examples, that's something we'll all look at together. Okay, we'll all proof it by being like, look, is this a clear? We've had so many examples this past week. I wish someone knew of one so we could look at it. So anyway, we'll have to say. But even looking at this, where this is, look, this is a move into the support. This is then that's the test into support. This is the move off of it, and then the break below. That is right there an entry. Is that the right support, or should that support have been different? No, that's a clear line right there, right? That's a clear looking good line over there. So I don't think so, but we'll look at that. What's the best pair to start with? So C. Brown, if you do go to the course module on how many pairs to trade and why. So first of all, in that module, I discuss why I think the more pairs that you're looking at, the better. And I have to say, I have to asterisk that with for many years. For many years, maybe even a decade, I was always under the impression that I would focus on trading 1 to 2 pairs. And I felt like, well, I was under the false impression that the more I learned that pair and the more I understood that pair, the better my understanding of the characteristics of that pair would be. This is a completely false theory, right? And again, I'm talking about an extended period of time of doing it. Why? Because it just only limits my opportunity. And if I'm just trading one pair, if I'm just trading the Euro US dollar, I basically have to force trades on it, right? Because we're traders, we do want to trade. And if something's not there and I'm only following 1 or 2 pairs, it's almost like you have to force things to happen. The more pairs you're looking at, first of all, 2 things happen. The more pairs you're looking at, the more of the flow of the market you're able to absorb, right? Which is it's so crucial. For success, it's really crucial that you have your pulse on the market. That's why the more time you spend doing your analysis, the better. And the more pieces of the puzzle that you're putting together day by day as it all compounds together. Not only that, but by following more pairs and then flagging them and narrowing it down to what is the best opportunity that day. And then later in the day, narrowing those down to what trade you want to take. you're doing a form of selection here that's just crucial to success over here. So I think, and again, in that module, it talks about all the different pairs I have here. There's a photo of them, and I should add some type of downloadable file would be helpful, but you should follow all those pairs. For a newbie, that's the way to start. John, I didn't see your other question. Thanks for reposting it. Could you please take a look at my email response to our early communication about membership this week? 100%, John. 100%. Jordan, questions again. I'm having issues setting the charts you talk about in the morning. So Ruben, you have to expand on that. I'm having issues setting the charts you talk about this morning a little bit. Ruben, could you expand on that? I don't understand exactly what you're looking for, and I'll look for that response in a second. Jordan, I have 200 pounds spare to take a trade. I'm thinking about taking a Bitcoin trade on leverage. I understand that's a risk, but this feels like a free trade. I mean, should you do that on leverage? Probably not, right? Should you do that on leverage? Probably not. If you were to do that on leverage, probably you should be doing that on like a 2x. A 2x I could see, right? And where would a stop out on a 2x trade be? Does anyone know? It's probably below 8,000. So you could feel pretty good about that. So by the way, looking at this point, still looking for a 10x here on Bitcoin, at least. That's what I'm looking for, right? So you're talking about 200 pounds into 2,000 pounds, or in a 2x, 200 pounds into 4,000 pounds. But if you go in highly leveraged into a trade, odds are that you're going to get stopped out and lose that money. You want a return on your capital. You're not looking to lose money. I think that you want to go in. Bitcoin is already so volatile to begin with. You're expecting 30% drawdowns at any given time. Could be more. And you're also looking for 10, 15x on the upside. So I'm going back a while here, but in the trade with no name, how do you distinguish between a normal test rejection, a test rejection break? Your level must be dead on or something else. So where was the chart I had? Was it over here? No, I'll just use this resistance line right over here. So to answer that question, right, this is our normal setup. This is resistance. You're coming into the resistance and you break it. So you have a broken resistance level. You're then looking for the retest to see if that broken retest holds as support. And if it does, and you start making a higher high, and you confirm this resistance and support, you take the trade on the higher high. That's the entry. The difference here is that the entry with no name doesn't break the resistance level. It comes right into it exactly, right? And yes, our levels are exact, right? Our levels are exact. So and then you get a back off, and then the resumption above. That's what the trade looks like. Do you need to focus on that? No, you only need to focus on our original break, retest, resumption, conquering the markets all day long. This is something that I've been observing for months now, longer than months, for several months now. It's something that we see occur often, and it's something worth talking about. But looking as another tool into your toolbox. Don't just start, like I said, don't just start taking all first pullbacks, right? Although you can, if you're not yet, turn the corner to profitability. Or if you're struggling, then you should only start taking first pullbacks. Don't just start taking trades that have the entry that has no name now. Do always continue to take the break, retest, resumption, because that's the money trade right there, all right? That's the money trade all day long. Look over here. I noticed over here, there's no entry. I saw one that had an entry that would have been a false entry, right? So I'm trying, like over here, right? You get the move into it, the retest. That's would have been a bad entry on that. Now you have others that are going to be good ones. Don't just start focusing on that. The best setup, the best high probability setup is the break, retest, resumption. Okay, one answered. I had too much weight. So Danny, a little bit of clarification here. Clarification is so important, by the way. I had too much weight at the true trend for decision making. Price levels over true trend. Okay. And Danny, by the way, huge progress is made in those type of fine tunings. Huge progress is made in those type of fine tunings. Don't confuse the true trend with the CCI entry line. Late but here. What's going on? I'm glad you're here. Right? The Brandon Bona, you're out in Oaxaca today, right? Awesome. So, Corey, how does the course operate best? Great question. Go through the course, set up TradingView and at MyFX book. So, look, this is the first two steps anyway. You're nailing it. So, best practices for the course. First, go through the course modules 100%. Next step, setting up TradingView and connecting to MyFX book. Boom, check, check. Set up Oanda for sure. Go with Oanda. Pick pairs and draw trend lines and email for review. Yeah, Corey, if you're having trouble understanding, and I have to say 97% of people do not. 97% of everyone is able to draw in support and resistance and trend lines with no problems. If you're unsure, send me a few charts and I will confirm with you. Like, again, there is that occasional small percentage of people who, maybe are putting in too many different. Anyway, most do not. But that's when the course starts, though, Corey. Right after there, after you get to what you just outlined, this is when really the important piece begins, and it's really over those next 3 to 5 weeks you should turn the corner to profitability. It is then going ahead and doing your normal analysis, or joining me right in the morning for the live streams, or later in the day watching that maybe at 1.5 speed, watching the pairs we go over. And it's not what I flag. That's what you should also be doing on your own, right? And yes, of course, we work together. You could see what I am flagging, what I'm looking at, why. That is education. That is help right there. But then you're flagging which pairs you're interested in. Later in the evening, you're going over if there's any entries you want to take. Maybe there's 1 or 2 entries you want to take that day, right? And then you got to stick to the course over there. You got to stick to the strategy. That's until you pass and graduate from here, you're only risking 0.5% per trade. You're taking no more than 3 trades a week. And until you get towards here, you're taking 3 trades a week. As you get towards your 3rd month over here, you know whether or not you should be taking 3 trades or maybe less, right? And that's where you'll be. You'll know yourself at that point. But that's how you do it, right? And that's the best practices for sure. So, Danny, listen, this is really important. And this is really good for mindset. So I overcorrect myself. What do I mean by that? I mean, every trade I enter, I just expect I'll be wrong, right? Is that setting myself up for failure? Not at all, because it's not even nearly the case. But I have that mindset, right? Because at that point, then I'm never afraid to take a loss. By the way, you're taking 0.5% loss, right? So make sure that you always respect your loss. So go into it with the mind frame that every trade you take is going to be wrong. Now that should not be the case, right? I would like to see you, somewhere around 55% of the time, your win ratio, right? Could you be at 45% and be profitable? Yeah, you could be around break even or better, no problem. So that's fine. Now, but every trade you take will not be correct. That's fine. Also, Danny, figure out what pairs you're trading. Also, notice that the DXY US dollar pairs, we've been sideways for a while. Not only have we been sideways, we have been aware that we've been sideways for a while. And it's been, right? It's been a while since I've taken a trade on a US dollar pair, right? So if you find that you're getting stopped out, is the market you're trading consolidating, right? Always look at that as well. So Ron, I just sent out an email, by the way. Two things, Ron. If you looked in the Telegram group where I posted this video, the link to this video, however you found it, at the bottom of that message was the link to the Conquering the Markets recommended playlist. And every single past training session is on there and invaluable. I remember in some of those, in the beginning ones, we were heavily focused on how to manage your trade. Absolutely crucial. It's easy to spot setups. It's easy to distinguish which is the better setup. Getting into managing the trade is really important. Watch all of those training videos. It's also in the same email I sent out with this link, right? And it's the PS and it has the recommended playlist. So however you found this link to be here right now, in that same spot, you will find, John, no problem. You will find out exactly where you're looking for the recommended playlist, rather, I should say. Jordan, could you identify the trend as simply as possible without the true trend indicator, for example? Could I identify the trend as simply as possible? Yes. So here's the Australian dollar, New Zealand, Japanese yen, right? Are you in an uptrend or a downtrend? From my perspective, I'm in an uptrend. Okay. From my perspective, for me to be looking to really focus on the downside, I need to break this area of support over here. This is all the way down. What is this at 72.80? And probably also this trend line over here. At that point, I would be attacking strongly to the downside. I could say I'm in an uptrend. Now, it's not that easy. I could zoom in over here. This is like where you should be hanging out. And could you say that you're in a downtrend here all day long? You're also in a downtrend, which means that you could be taking trades here on both sides of the market. But when I see this downtrend, this developed here, right? This was the first impulse down. You should have been buying off that support, right? Because that's in an uptrend. And then once it was clear that this ascending wedge was developed, and again, we were on the live stream when we looked at it and we had the breakdown and then the retest and then the resumption. So that was a clear short. Now, if I zoom out, would I say I'm in an uptrend? Yeah, I'm still in an uptrend. If you're looking to buy off support, yes, I support that fully. But on a swing trader right over there, if you took this short over here, do I see it? Well, I pointed it out. I saw it clear as day. So again, a lot of people, trading is very nuanced. This course, this strategy is pretty close to getting something concrete and black and white as possible, but do not tie yourself into hard and fast rules. It's not like that at all. You have to be very adaptable, very flexible. And by the way, there are times it's very difficult. I could point out on the S&P, like as clear as day, it's not just the S&P, it's also the same. I'll use the Australian dollar, Japanese yen. This was so difficult for me over here. And also on the S&P. This area over here was so difficult for me because in my view, I'm in a downtrend and I'm selling resistance in downtrend, right? Now, also, and a lot of you, by the way, at this point, were buying off support. I was not. I kept saying I'm still selling off resistance until we cleared to about here. Then I began buying off supports. So this whole area, I'm still selling off resistance, right? Because to me, it was in a downtrend. And that's not even a bad thing to do. When I say bad thing to do, like there was follow through you get your stop loss to break even. It's not a bad thing to do, but it's not easy. There's no magic to it. It's grinding. Awesome. That's okay. There's always a lag because I'm the one lagging. I'm the one following questions in the order they were presented. BTC, I can't figure out how to buy low or sell high. I prefer buying it. Accumulation, dollar cost averaging into Bitcoin is by far the strategy. Could I take a trade? Eric's asking, could I take a trade where we get a breakout on the first candle and a retest and a resumption on the second candle? I look, tell me if I'm right or wrong on this. Is this what you're talking about here on Ethereum? Like Ethereum had a breakout, a retest, and then a resumption up. And 100%, this is a valid setup. What I do like about this one, and it doesn't have to be like this, is that you did have one lower high before the entry. So I like having the lower high. Eric, to answer your question, do you need that lower high? No, you do not. And in a fast moving market, you won't get it. So just keep that, to answer your question, yes, you can. And that's that. Does the time of day yes, the time of day is absolutely critical and crucial. This is one of our most important edges. We only trade when London is open. What you need to trade around and why? Look, I don't follow volume. You all know that, but that is the highest volume time of the day. So I do follow volume. I just don't follow it on my chart. Or I'm not looking like I will not take a trade if there's low volume overall, or but I am trading during the highest volume portions of the day. It's only during London. This is absolutely critical to your success. We could rename the true trend first pullback to the setup seldom seen in this market, right? And that's why they're important trades, by the way. And you might not see them too often in Bitcoin or crypto coming up in the bull market, but they're so important exactly because it's the start of it's the start of the sweet spot of a trend, right? When I say sweet spot of the trend, like I'll start over here in this portion of the true trend. This right here was not the top of the trend. The top of the trend was over here, right? When the market peaked up here. I'm not looking to try to pick tops and bottoms. What I'm looking to do is the sweet spot of the trend, which is from here to here, right? That's the sweet spot, the easy portion to pick out. It's very difficult to pick out the top, and it's very difficult to pick out the bottom. Sure, Paul Tudor Jones, the most money could be made on the turn, right? But I'm not looking to make the most money. I'm looking to make the high probability trade. So these trades don't happen often where you get the first pullback. But the first pullback entry, right, is going to give you room to manage that trade, and it's a good one. All right. Jordan, do we only take the entry with no? Yes, we only take the entry with no name, or we only take entries during the London session period. Now, one caveat, and you could choose to follow it if you wish. You can take the trades, any signal entry that happens the last 2 hours of New York, you could take those trades. They are good signals. When I say good signals, that if you take enough of them, you're going to end up profitable. They just are not. They don't trigger often. There's very few entries during those 2 hours. So to make my life easier, I don't take them at all. I got into trading for a high quality of life. So for a higher quality of life, since there's so few trades, I just don't even take them. But you can take those. Right? So if you don't have, first of all, if you're using Oanda app and you don't have the true trend, I would recommend considering using TradingView if you want to use the true trend, and then placing orders on the Oanda app. That's what I would do. Now, you also could try using the CCI, two CCIs, using one 70 period CCI for the trend CCI, and then using one 3 period for the entry CCI. And you could have them like 2 indicator windows and see if that works. But I personally would just use TradingView, and I would just place my orders onto Oanda. If the price breaks the resistance in one candle, then retests the resistance and bounce and goes higher all within the candle, do you suggest taking that? So I think, is that similar to what we looked at over here? But like, for example, instead of the entry being over here, are you saying if this candle didn't exist, this candle here didn't exist, and we had the breakout, the retest, and then this candle didn't exist, and then we made the higher here, would I take that? Well, I would not take it. Again, you all know that I look for the lower high. Could you take it? You could. Would I take it this far away? I mean, it seems a little far for me to take it. So yes, you could take it. I am prone not to take it. The less is more. You trade, the calmer. Look at these two: prepared to be wrong or expectation to be wrong. Just comfortable with being wrong, right? As a trader, you should be very comfortable with being wrong. By the way, being wrong almost half the time is a high percentage, right? Most traders, when they start out, they really want, like, they're looking for some type of strategy that has a win rate of like 90%. Which is why, what are they doing? When you have a win ratio of 90%, what are you doing? You're cutting your winners short and you're holding on to your losers. And what happens to every single one of those accounts? Well, eventually they wind up blowing up because those losers you held on to wind up destroying your account. So you have to be very comfortable with taking losses. So you got to be completely detached. It's not that prepared to be wrong is better worded than saying expecting to be wrong. I mean, I expect to be right when I enter a trade. I mean, that's the dead honest. I expect to be right, but I'm prepared to be wrong. You have to disconnect your trade from the outcome. You guys are full of wisdom today. That's right. You have to disconnect your trade from the outcome. You have no expectation of winning or losing on any single trade. You're interested in winning. This is it right here. Greg, extraordinarily well articulated, right? First Chi, and now Greg. And those are, this is where it's at. You don't expect to be wrong, but you're prepared to be wrong. And you do have to disconnect your trade from the outcome. You have to have no expectations of winning or losing on any single trade. You are interested in winning over a series of trades. You are the casino. Sideways markets after July. Dan, difficult to be profitable myself. Will take the course a second time. Your strategies have been helpful, eye-opening. In BTC up 30% September. Thank you, Dan. This is great. Your one focus right now should be on yourself, trying to figure out when price is consolidating, when you're in a sideways market, and avoiding those. I've been, and I don't really do it consciously, right? It was right around here, the first week of August. This is when, by the way, when we came down into here, right over here is when I said we were consolidating, or that I thought, excuse me, I don't mean to say absolute, when I thought we were consolidating, right? And mind you, on this break, I thought this could be the breakout of this pair, right? Anyway, once I saw that we were consolidating, I started avoiding dollar pairs, right? And there could be a couple of opportunities when maybe I tried to play the breakout over here, right? I was looking for the breakout and a counter trend trade over here, which very, very quickly then was faded. And then since then, I've been more or less neutral again. But there's been plenty of opportunities on the other pairs. So Dan, this is fantastic in that you understanding your weakness is an enormous strength. You do want to avoid sideways markets. You can't always know when it's a sideways market, but try to be more aware. Adrian, two things. First of all, you could send me an email with the subject heading email, and I will confirm for you that you're on the list and receiving these emails. Check your bulk folders. Check your spam folder. It's coming through MailChimp, and there's a high probability it goes there. But also do note that it's always posted in the Telegram group and then pinned so you're alerted, and also put up sent by email. I want you to receive those emails though. Check your bulk folders. Jordan, and it will be whatever email you signed up with. It's automatically done. Do you share your real-time trades with the group so we can follow? I read somewhere in the course that you used to do that. I do not, for a really important reason. If I'm sharing what I'm focused in on, then everybody's focus is in on that. And that is not helping them whatsoever. I know that first of all, first understand how extraordinarily difficult the markets are to be able to put together this type of course, this type of strategy that could be followed and could bring people to this level is absolutely extraordinarily itself. Now, if you take 10 people, all 10 of them will not do that. First of all, X amount of those 10 people are not going to follow the course, right? That's just human nature. But if you could take 4 people out of the 10 and get them here, that's extraordinary, right? And that's the goal of the course. It's not to get you to follow my trades, which will never get you to be able to be a successful trader on your own. And also, you won't be able to manage the trade the same way that I trade it. So that is detrimental to the whole purpose of the course itself. That's why I don't do it. I notice that everyone only then focuses on what I'm focused on. And by the way, PS, there are certain months that students outperform me. Yes, so it's the full London session, which includes the New York overlap. So as long as London's open in session, which includes the New York overlap. There you go, Shane. Already answered that question. So Ron, two ways to answer that question. The first is, again, reiterating, it's during London, but it's as price makes the exact higher high or lower low. Okay. And by the way, if you're buying, it's plus 1 pip plus the spread. Or if you're selling, it's just minus 1 pip. But you're not waiting for the next 8-hour price bar to close for the entry. It's as the higher high is made during the session or the lower low is made. And by the way, as New York opens, right, and the New York bar starts, you need to adjust your entry level. Because if this is the Asia price bar and I'm looking to enter on a higher high and I have my buy entry here, right? But that doesn't happen. Let's say that this is London and I still have buy criteria. I have to move my buy entry down to the higher high of the London bar, which during the overlap could enter like that. Kent, new here, just starting the course. Awesome. Unfortunately, previously, I'm already in a gold futures trade. Any suggestions for me? I don't know about setting proper. So a couple of suggestions here. All right. So number one, the hard truth. If you're into a trade, right, like you are right now, Kent, then that's prohibiting you from following the course. Why? Because you're focused in on that trade, right? You're just holding on to some trade. You're focused in on it, and that's going to prohibit you from actually following the course. True, right? This is why all that you should do is completely commit to everything taught and shown in the course, because that's going to get you here. That's going to get you here. And doing otherwise will not. So number one, that's most important. Number two, if I was into a trade right now, right? And okay, obviously we know I would not be in a trade. Where, if you looked at this chart, where would your stop loss be if you know that you are dead wrong right now on this trade? In my opinion, it would be below here. It would be below this trend line and it would be below this support over there, right? If that happens, if we trade down over here, call it right around, 1865, I would say that at that point, look, I'm getting out. Now, is it possible we come back down and test that little bit of local support? I doubt it. It's possible. Probably if we break down over here, probably we're coming back down much lower. Anyway, from my point of view, I'm dead wrong on this if I break back below this trend line and that support right over there. So that's where I would have my all right, my pain stop. It's time to get out. Oh, sounds good. That's just to entries. That's just to opening up the position. Jesse's flipped the 90. Who wants to be right 90% of the time says he's wrong 90% of the time. Well, Jesse. What this is so true. Two things though, Shane. I'm going to build off that first of all. So a lot of people a lot of people are really good at placing their stop losses and take profits, but unfortunately they're too good. What do I mean by that? Like a lot of people, for example, maybe they see this little bit of resistance right there, and then they'll be like, all right, I'm going to lock in my stop and I'm going to place it right there. And people are so good at where but they get stopped out like by pips and then trades reverse. By the way, if I entered over here and I'm looking to move my stop loss, I don't do it until I resume down, until I see where the swing high is. And then I put it right above that. But that's again, one of the training sessions on managing the trades. It gets really into that. I think a lot of people actually will do better off because everyone knows where to put their stop loss. They just do it too exact by exaggerating and giving themselves, when they enter the trade, a little bit of extra room, which means a lower position size, but you will increase your overall win rate. And also, I completely agree with Shane, what he's saying on that. Listen, if you have this mindset, which is necessary, look, if you're not sure about a trade, get out. You could always re-enter. That's what I've been on gold, right? That's where I've been on gold. Like, I'd rather enter when it proves itself, right? I took the entry here at 1904, somewhere over 1904, right? Then took the stop loss, right? I was wrong on the trade. I said it was an aggressive trade when I took it, by the way. I was wrong on the trade. I got out really quick. And then I've been waiting to get long, right? If they're this could be right now, actually. Like, we could be setting up for the long entry, but I've been waiting. You could always enter long when the trade looks better. Greg, working on Mark Douglas, trading in the zone, and comparing it to conquering the markets. Disconnecting the trade is what you've been telling us. Greg, I mean, first of all, when we were just in the States, I picked up the package, which I haven't unpacked my suitcase yet, but it's in there. So thank you for those sprats. Second of all, this is like a treasure to me. I can't wait, even if it's a year from now, to get my hands on this. I think people are psychologically programmed to feel at 50%. Wow, let's take a look at this question, this comment, this insight. I think that psychologically people are programmed to feel that 50% success rate is a failure. It goes against instincts, needs to overcome that. So, I mean, well said, great observation. And I think that when it comes to trading, everyone is innately programmed the wrong way. I am serious about this. You have to sit down with yourself and have a talk with yourself. I've done it. Look, you've heard it. You've heard it all been said. You need to cut your losers short and push your winners. Yeah, great. I've heard that, but whatever. You need to sit down with yourself and realize that the reason the majority of traders fail is because what they do is they cut their winners short and they hold on to their losers, hoping it comes back maybe to break even. If you've been there and understand that, it's easier for you to make this decision. You have to understand that. And then you have to make the commitment to yourself that you will never do that. That you will always cut your losers short and look to push your winners, which means some trades that were slightly into profit, which you normally would take profit at, you have to be willing to accept will be break-even trades. That's how you do it. Trading goes against human instinct. It's the exact reason why you're going to have a lot of people at 20,000 FOMOing into Bitcoin, but down over here, they were scared to buy it. And they're going to FOMO in at 20,000. It's the exact same reason at 100,000 Bitcoin, people are going to say, it's going to 1 million and FOMO into it. Jordan, do you realize that in the earlier course module, you do say you're going to share trades? Yes, that I need to fix that. And not only fix that, I need to spend like a couple of weeks at this point. Now that the course is probably when was it released? I would say around March. So it's about 7-8 months old. There's a lot I want to revamp. I want to include right away a best practices module, a short module, the best practices module, and I also need to re-edit things like that. There's a lot I want to add to it, and I will, as soon as, I want to do that soon. No, no. So for this exact strategy, right? My profit goal is 2 to 3%. There are some people, myself included, for example, in July, right, where had a higher percentage return on that, and that could mean also a lower in then September and October. Averaging 2-3%, that's money. That's the sweet spot. That's exactly what the goal should be. I don't think that that you should have the whole mindset or plant in your mind that that's for a new trader. That's phenomenal. For an experienced trader, that's phenomenal. Listen, if you look, this is the skill set through this course that you want to master and learn. Now, of course, you'll have other investments with other time horizons, right? That's for example, right now, Bitcoin, right? Bitcoin. Are you looking to make 2 to 3% a month? No, come on. So for the swing trading, yes, that should be your goal, and that's a phenomenal goal. By the way, get into your head. I mean, a 20-30% return yearly. That's phenomenal. And that's true, but you shouldn't have that as your goal, right? I certainly believe that you should not set that. You always want to set goals and expectations you could achieve, rather than setting them too high where you might not be able to achieve them. Because the more you meet your goals, the more that like builds up confidence, the more that furthers further success. Craig. Canadian dollar, Japanese yen. Let me pull her up. I think I need a sip of matcha here, huh? Hold on one second. It's so funny. 1 hour in, it's always like at the 1 hour mark that I need a sip here. Canadian dollar, Japanese yen. You mentioned 4 red bars with lower lows. Seems like these bars took out 2 levels, now testing lower channel. Test of 80 with resumption down. Is this entry bullish? So, I'm trying to see what. Okay. When I mentioned it was 4 red bars in a row, I was looking at 1, 2, 3, and this green bar was right at the time. 4 red bars in a row, right? So now you're saying these bars took out 2 levels. I'm sorry, I just kind of like got slow in the brain over there. I'm trying to see where you have that level, and I see a resistance level right there where the mouse is also. Probably what you're noting, right? I don't know what just happened to me. So with the resumption down is the entry, even though the 2 trend is bullish. A couple of things. First of all, observations. If over here the true trend had gone negative and closed negative, and you have the entry CCI pullback like that, if this was like a first pullback, you have to be nuanced. You can't be so black and white. And that if this was a first pullback and you were looking to take it, that's still a good long trade, by the way. Now, over here, I'm looking to sell, right? I'm looking to sell if, this holds. We could get a wick over here. And if we come back down and start making lower lows, rejected by that trend line resistance, rejected by this resistance over here, right? That's a sell signal for me. Now, also, we could come up even higher into this area over here, and then breaking back below that trend line, that would also be a sell signal for me. I don't care that the true trend is positive here. I'm not looking at that. Am I looking to buy? I'm not looking to buy over here. I'm only looking at the sell side. I think that we have to get back above this resistance over here. I wouldn't even be looking to buy over there. Yeah. I would not personally be looking to buy until we broke above that trend line over there. Now that's me. That's not necessarily you. And you might see something different, which happens all the time. You guys see in the Telegram group that other people have different looks at the same thing, and it's no right or wrong. But right now, I'm still looking for a short. Back to Daniel, I don't care that the true trend is negative over here. I was looking for longs up here, by the way. Here I was looking for a long. Here I was looking for a long off this trend line over here, right? But now that we've broken the trend line, I'm looking for shorts until this technically corrects itself. And for me to technically correct itself, it wouldn't be just closing above this trend line over here. It would be getting back above that resistance right over there. Jordan, sometimes I spot multiple trend lines and channels on one chart. They sometimes contradict each other. How do you decide which trend lines to draw and which potential trend lines to ignore? I mean, Gaia, I would need a concrete example. I kind of just walk through, like here you have conflicting things I just talked about. Let's try, so here's what I do though. I take something complicated like you just said, like the markets are complicated, and I try for myself to simplify them down as simple as possible, right? So how could you simplify this down as simply as possible if you're getting confused with trend lines, right? Here's the thing. Horizontal support and resistance take precedent over trend lines. So if you're getting confused right now with trend lines, focused on horizontal support and resistance, and only take trades right now off of horizontal support and resistance, off of breakout, retest, and resumptions. All right, Kaya? Thank you, Kent. You know, it's all about building each other up. That's all. Yeah, trading, I don't even know how I did it. Going back 20 years. Trading by yourself could be one of, figuring it out all on your own is one of the darkest things you could go through on your own. No question about it. That's right, Eric. Trading in the Zone. And so for 20 years, this book has been recommended to me. And it's probably the highest recommended book that I've ever known. I've never read it. Greg has pointed out there are some similarities between what we do and what Mark covers. So I'm interested in finding out what those are before I read other things. I have this crazy thing. Anyway, you need the same feeling that you have when playing a slot. This is right. This is how I look at it, like the casino. When you're trading, you got to have the same feeling that it's a matter of like if you play blackjack, you know that you have an edge in blackjack, right? If you know that if you play enough hands, you come out ahead. So Mike, this is actually a black and white rule, so it's very easy. So if you're buying, the first resistance that you come into is when you move your stop loss to break even and take a small bit of profit. 10-15% of the trade normally. Sometimes if you know that you're in more of a ranging market here, or if you were like, if you were taking like a bull flag support into that, you could take a little more, 20-25% for sure. But as you come into the first resistance when buying, you move your stop loss to break even. When you're selling, like if I sold here, if I sold over here into that first support, that's when I move my stop loss to break even. So that's a hard and fast rule. I don't know what's going on over there. No, and don't use a trailing stop loss ever. They prevent profit. So hard and fast, as you come into that first support or resistance level, that's when you move your stop loss to break even. Janie, this is a good session. I feel like I say that every training session, but as we began, I didn't know which way it was going to go. This is a great session. You guys are the questions are, anyway. I've been trading equities for over 10 years, right? And have beat the market by using candlesticks, but my trades are about 77% positive, and learning from Jordan is improving that. That's an awesome win ratio, 70%. Also, I mean, look, I'm just pointing out the fact that for the past 12 years in the equity markets, we've been in an enormous bull market. right? Hopefully you're geared towards the long side on most of your trades. Candlesticks are, so I spent a lot of time in the beginning of my career. I'm sorry, can you hold on one second? Sorry about that. So anyway, as I was saying, I spent the beginning of my career really studying and looking at candlesticks. Steve Nielsen's candlestick chart book, fantastic. But at the end, and I do think there are certain, like dojis are really good for turns in the market, hammers and hanging mans. They don't play any part today in my trading whatsoever. But a 70% win rate is enormous. That's awesome. And also, by the way, just pointing out equities, usually, this comes to our trading as well. The As it is, whether it's trading or investing, the higher the time preference, generally the more profitable that people are. So when you have people trading on the 1 hour, they tend to not be profitable. The 8 hours, a higher time preference, much easier to trade. A lot of people that are holding on to equities, be it for several months and or years, you have that higher time preference. Yeah. So Adrian, so the reason I don't is because I mean, again, going back to the high. When I say high, I mean the extraordinarily high degree of success here I have from students. I don't need to. I Look, first of all, forget the fact that it costs next to nothing, the course. I don't think you could find another comparable course on the internet. And by the way, they cost more than several thousands of dollars. And I don't think they give anyone, a system. Look, I know the results. I've seen the results. There are people in here who are having tremendous results. So I don't think so. I think what I've done is definitely the way to do it. Yes, Danny, me too. That's important for me. I don't know if there'll be a pullback or some breakaway on Bitcoin. So what I do know is that eventually there will be a 30% pullback. Now I don't know if that comes from today. I don't know if that comes on us testing 19, 20,000, or I don't know if that comes after we've broken that and hit 30 something thousand. I have no idea when that will come. This is really, and this is bringing me towards the best way to trade Bitcoin during the bull market, which we're getting close to. I always had in my mind, once we broke like 14,000, it's time to prepare that video, because I'm not expecting a 30% pullback before that happens, right? And so either way, we're getting close to when I have it in my mind calendar that we need to do that. No one knows when that first pullback's going to come. I'm looking for 30% pullbacks. Really simple. That's the time to look to enter, is the 30% pullback. If you pull up over here, the true trend, right? If you're looking, not the true trend, not this one. Let me hide this. This is on a 12-hour time frame. I'll put it on the 8-hour time frame. So just follow me what I'm doing. How could I get rid of that? No, I can't. I'm in, there we go. I can't even see it. I'm looking at two different charts, which is why. Sorry about that. Let me come down to this 8-hour over here. Let me pull back really quick, just over to 2017, and then we'll see it really quick. All right. So if you pull up the true trend, by the way, and I'm going to show you this really quick. I'm starting to lose brain focus over here. Can I make this bigger? Okay. Follow me here. These boxes are 30% pullbacks. Okay. We're going to focus in on them in 1 second. That's the high. All these boxes are 30% pullbacks. By the way, this one is 40%. Okay. All these are 30% pullbacks. So let me I'm sorry for my fluidity here. You guys can see it. The Lime has been much better for a long time now, for about a month. I don't think it's Lime. I simply think that just low on energy, right? We started here at 9 in the morning. It's a few hours of talking. Anyway, listen, here's why. This is going to be the gist of the video of the best way, I think. By the way, I can't even see the comments. Anyway, I wanted to share this with you right now. Let me take a deep breath. Wait, I'm gonna pause 1 second and do that. Just a quick 5 breaths here, and do that whole thing of the fingers down the side of the face. All right, let's go. These are 30% drawdowns. Here's 2 ways that you could look at playing this. Like some people are going to be looking to try to time the market, meaning that they're going to try to, like, when price goes up, they're going to try to sell so that they could buy back lower, right? That's the natural human instinct. People are going to be like, okay, prices, look at this, for example. Price is up, what, 50%? Am I selling, right? Are you going to sell up at 100%? How do you know when to sell? And by the way, because this is human, this is just the way that we're wired. I feel that I could get the most potential, right? What happens over here? Are you like, this is a 130% gain. Did you sell, when price was up 35%? Did you sell when it's up 50? Who knows? I know that I can't time it. I know that there's no way that I could time it to the upside where I could exit a position and then buy back lower. Okay? So first of all, know thyself, right? I know that I happen to have pretty immense market timing skills. And I know that I cannot time the height of the cycles or the height of the moves to sell into and not get burnt. For example, by the way, someone right here could sell, right? We took profit into the resistance. That's a swing trade. If someone was position trading this and they came into resistance and they took profit, well, this is Bitcoin. By tomorrow, we could be trading at 14,000. I cannot time it. So what could I do? Well, you could look at the true trend. When the true trend goes negative, could I sell and then buy back in when it goes higher? Right? If I do that, then I'm basically protecting myself from any downside risk, but I'm actually buying in back higher than when I exited in most cases, or not even higher. In most cases, right around the same area. So there's really no potential on the upside for me to do that. What for me is the best, and when I say best, leads to the highest profit potential, is very simple, right? Is waiting for price off of the high to pull back 30% and buy there. Not trying to time the market, but and that means not exiting positions on the upside. I'm only adding to my overall position by buying 30% down. And there will be a few opportunities. Now, when will I stop doing that? I think as Bitcoin comes around, because I'm looking for 140. I'm expecting higher than that. I think as Bitcoin passes $70,000, $80,000, that I will no longer be looking to do that. But up until then, any 30% pullback, I'll be looking to add to my position. That means, like, from profit that you've accumulated on the way up, you're then adding to the position. But I'm not looking to sell on the move up and then buy back lower, because I can't do that. I don't have the capability or the capacity to do that without actually probably preventing myself from profiting. So I hope that's a helpful little bit of insight right over there. Ron, thank you. So, I mean, this is a good question over here. Right, Greg, this is so I'm going to go with both. First of all, right, it's not dangerous to buy Bitcoin from BlockFi or Coinbase, right? And if, of course, any investment you make, you have to pay taxes on that, right? That's the way it goes. Now, what else could I say? Um, Now, as far as privacy wise, if you were like privacy minded and did not want anyone to know about what you're doing, there are two options to look into. You could look into BISQ, BISQ, right? You'll go look on Twitter, find out more information about them. You could use like a BTC Pay server, right? But and you should follow Tales from the Crypt podcast, right? These guys, Marty and Matt, they talk a lot about like tech, like OPSEC tech and things like that. But Bitcoin is not private; it's a public ledger, and these chain analysis companies are pretty heavy, right? And if they're looking, you should anyway. You should just assume that when you're using Bitcoin, whatever you're doing is being tracked. I think we're going to call it a session. Is the Mexican Ruby predicting a Biden victory? Look, Scott, I don't know. It seems to me that the equity markets here are predicting a Trump victory. We'll see what happens in 2 weeks. I think the unknown is what happens afterwards. We'll see what happens. It should be a really fun, and I say that sarcastically, next few weeks for all of us. But anyway, I don't know. We'll see. No, Kaya, that's a great question. I don't. I'm looking at what's happening on price alone, on that chart alone. Jesse, could you go over what I'm seeing, the true trend with the Swiss franc, Japanese yen? Let's take a look. So this is a great example when Daniel was talking earlier here about the true trend, right? And it's up, and I was looking for a short right there, right? And not only that, now that you're coming up and retesting it, I'd be looking for another short. Now that was based off of the down move and then this bearish chart pattern, right? Now if we got above here, that's when I said that. This was when I was at the hotel on Monday. I said that's when I would be looking to go long. Now, if you're just trading off the true trend alone, right? So when did you have the first pullback, by the way? So that is kind of one, but not really. It's not clean. I'll give you a clean example, which is this one, right? That's an entry over here. I think that there's no question I would have been stopped out of the trade if I took that. So you're not still holding a first pullback entry. So all I could say, Jesse, is that I've been following this pair actively with this one, and I've been on the short side, but in live streams also explained clearly why. Yes, 100%. Yes, all day long. Yes. You could be successful just trading on technicals alone, 100%. That's how you should do it. Tom, great session for sure. I'm not going to take any more questions. I'm fading out over here. So I'm going to go through what's over here, but I can't. Thanks, Giles. Absolutely. When Bitcoin reaches its peak, the exchanges will be cluttered. Exchanges will only allow you to convert small portions at the time back to US dollar. I don't know why you say that. That's not something that I'm under the impression of. So I'm interested why you say that. So the fees, for transactions may go up, but I don't understand why exchanges would limit any type of, that didn't, I don't know. I'm not under that impression whatsoever. Do you have any, I don't think that's the situation at all. Where are you coming from? Where are you saying that could help me have a little bit more understanding? Absolutely. Yeah, it feels like a Friday, 100%. 100%. That was that was a swing trade that we were looking at. That's not how that was just a swing trade. We were looking at that in our normal sessions, and this was on the 8-hour time frame, and that was just for a swing trade, right? If you were swing trade like gold, like man, I've been holding gold over a decade, right? I don't trade internet, but I do trade gold sometimes from a swing trader's perspective, like we do in FX. This was just a swing trade. Yeah, Shane, by the way, 4-year cycles, rinse and repeat. If you are able, and you don't have to pick the top. I don't have the expectation that I'm going to get at the top of the bull market, and I don't need to. Like I said, for me, like 140, that's kind of below where I think we go. And I'm not exiting at 140, but I'm not trying to pick the top either. But if you do get out at the top and then accumulate back in towards the bottom of the bear market, and by the way, that's as clear as day for me. This is right over here. Bear with me 1 second. When you are exactly 15 months to the next halving, the dark green dot, that's the single best time I could see to accumulate Bitcoin, right? This is dark red dot, 15 months to the next halving. That's the time to accumulate Bitcoin. And if you're able to exit at the top and then accumulate back in and do that again, you're talking about massive potential over there. I'm talking about creating wealth. This is one of my 2 favorite books, Reminiscence of a Stock Operator, favorite trading book, as well as the Market Wizard and New Market Wizard books. Those are my favorite trading books. The only trading books that I've read, and the ones that I've read over and over and over again. Yeah, gold is, everyone should have a solid read on gold, right? You have broken out of the trend line. You're coming in right now. You're retesting it. If you resume up over here, that's a successful retest. See where you close today on the daily. Closing above this would not give an entry, but closing above here today, that gives a successful retest for sure. All right, everyone, I'm going to call it a session. It was a fantastic one. Thanks for being here. Definitely. Oh, we got through all the questions. How about that? So, thank you, everyone. I don't think so. I don't think the system will freeze at all. The only thing that will happen, it will be just a little bit longer to confirm blocks, and it'll be, transaction fees will be a little bit higher. By the way, I love the term here, conquistadors. It's amazing, Jeff. Awesome. Thank you. Awesome. Great session, everyone. I'm so glad that we did this together. right, everyone. I'll talk to you later.